Hello everyone, welcome to today's session. So today we are going to continue our chapter number 10. So till last session, what we have done? We have discussed on the SRE 2400. What is that? Can anyone provide me a quick recap of SRE 2400, what we have discussed? Anyone? Anyone? No? You guys have not gone through the last session or have not revised it? Fine. Can anyone tell me what is the difference between audit and a review? Basic. What is the difference between audit and a review? No? Okay. What we'll do is uh, let me take you through the SRE 2400 and what we have discussed till now in chapter number 10. So we started with the chapter number 10, okay, which is a review of financial information. When I say review of financial information, review is an assurance engagement. There are other assurance engagement like audit. Similarly, review is also one of the assurance engagement wherein we have limited assurance, not the reasonable assurance. We have limited assurance. Now, as a limited assurance, the question comes is what kind of procedures we will be performing. Okay, what kind of procedures we will be performing. So, to provide the limited assurance, we provide or we perform a review procedure. Review procedures, that means analytical procedures and inquiry. So when you perform inquiry and analytical procedure, those are the review procedures. So in order to provide the limited assurance wherever is required, you perform a review. A review means inquiry and analytical procedures. And when you perform a review of financial information and you take up an engagement wherein you have to perform review of financial information, you use or you rather apply SRE 2400 or 2410 standard for those engagement. Those are the review engagement standards. Okay, standards on review engagement, SRE. Okay, now what we understood is when there is a review of historical financial information, we will refer to SRE 2400. If it is a review of interim financial information performed by the independent auditor of the entity, we'll go for 2410. Now, 2410 is something we will discuss today and then we will proceed to the chapter number 11. But before that, we'll do a quick review of, again, quick revision of 2400. So when you have to review the historical financial information of, based on the SRE 2400, understand one thing. We are applying the same concepts which are there in the audit, but to a limited extent. So if it is a review, again, it's an assurance engagement, but where you are providing the limited assurance. So review is an assurance engagement. Okay, but point is that you're giving limited assurance, not reasonable assurance. As a result, all the procedures, all the things that I will performing will be from the point of view of limited assurance. So it is not something new that we are going to do, but we are going to perform the same procedures which we have done in the audit, which we have understood in the audit, but bit modifying them with respect to the inquiry and analytical procedures. So for example, as we discussed, that quality control will be applicable. Okay, preconditions for accepting an audit engagement, review engagement, that is similar to what we have seen in SA 210 will be applicable. Okay, understanding the entity, then materiality, similar to SA 315, similar to SA 330. I am not talking about application of SA 320 or 315. I am talking about similar to or applying the SA. Both are different that we discussed in the last session. that if I say I apply SA 320, means word to word, whatever is written in the standard, I will apply that. But when I say similar to SA 320, that means something similar concept I am borrowing from the materiality or whatever SA I'm referring to, and I will apply here by modifying it to the extent which is as per given in the standard. So similar to SA 315, 330, then we understood about the inquiry, analytical procedures. Then we went through and understood similar to applying SA 550, 240, 570, work performed by others. We came to a conclusion where you say, okay, modified conclusion, unmodified conclusions. We discussed that. We discussed on the events occurring after the a report of either your historical financial information or review. Okay, then we understood about the written representations. We also discussed about the type of your opinions which are there, or review conclusions. Basically, here the term that we will use is the conclusion rather than the opinion. Okay, so unmodified conclusion, modified conclusions, similar to what we have seen too in SA 700, 705, 706, EOM paragraphs, OM paragraphs, everything will be similar. We have discussed. And then we also discussed about the practitioner's report in this scenario, how the practitioner's report is required to be drafted. Like what is the purpose? Okay, what is the information that you are providing in this? What is the nature of that? Responsibility, all those things we have discussed with respect to the report part, the emphasis of matter, other matter, documentation, that is similar to what we have understood in the audit, but to the extent for the limited assurance. That is SRE 2400. Yes or no? Any doubt with that? Or any doubt in any of the topic that we have discussed? Before I start with the next standard for today, any doubt? No? Okay, great. If no doubt, then let's proceed to the next standard. See, now the next standard that I want to take up today is SRE 2410. That's a review of interim financial information. Interim financial information, which is performed by the independent auditor of the entity. Unlike the practitioner, now here I will be using the term independent auditor of the entity. I'm using the term auditor. Second, instead of historical financial information, I am referring now to interim financial information. So if I say interim financial information, if I'm again at the end, I am performing review. Review means inquiry plus analytical procedures to provide me limited assurance. Now, if I say I am performing a review at the end, but it is the subject matter which has changed. It is the interim financial information. And now I am the independent auditor of the entity. What difference it will make? Can anyone tell me? Now, what are the things that you think will change here compared to what we have discussed in SRE 2400, which is the review of historical financial information? Anyone? What difference it will make now? Because earlier I was a practitioner doing review of historical financial information, but now I'm the independent auditor of the entity doing the review of interim financial information. Anyone? Anyone, what do you think? Do you think this will make any difference, or it will be same like SRE 2400? No?
No, I think the interim reports are prepared quarterly basis generally for a listed entity, for example.
Sorry, your voice was breaking. Can you repeat again?
So I'm saying that interim financial reports are generally prepared quarterly basis for
Yes,
the listed entities. So maybe the auditor gives a limited assurance on those review on those financial statements, which are
yes,
quarterly prepared.
yes, absolutely. Now the question comes is, but why do we have a separate standard for that? Like, what difference now it will come if it is done by the independent auditor for a listed entity, quarterly review he is doing? What different now he will do compared to whatever we have discussed in the SRE 2400? Anyone? What difference now it will make? Like, I could have applied SRE 2400, but why I am applying this one? Like, why do I have this one? Okay, see, okay. Now what we will do is, let's let me take you through the scenario basically. Okay. Now what happens? Understand one thing. That when a quarterly review is performed, basically. Okay, when quarterly review is performed, now at that particular point in time, what happens? That a auditor is like, let's say I'm talking about independent auditor of the company. Okay. Now let's say you are the independent auditor of the company. Now you already are aware about few things. You are the independent auditor. You have the added advantage. What added advantage? Basically, you already know the financials. You are already doing for the audit. Understand one thing, that when I talk about independent auditor of the entity, he is already doing the procedures for the purpose of audit. As a result, you already have details available with you. You already have information available in your hand. Are you understanding the point? So, when I talk about SA315, understanding the entity, are you not already understanding the entity from the perspective of the audit? Yes or no?
Yes.
You are already. Are you not understanding the? Are you not, planning or performing the procedures from the perspective of audit? Already, when there is an interim going on. Let's say, for example, there is an interim for the second quarter or the quarter one. At that point in time, you will start the procedures not only by the point of view of for the review, but for the audit order, because at the end you are the audit of the so you are the independent auditor of the entity. Will you do the double procedures? No, let me do understanding from the review point, and later on I will do the understanding from the audit point. No, no one will do that. So you will not double your efforts, basically. Okay, one for the audit, one for the review, and wherever required, you will combine the efforts. You will collect single information which can be used for both of the scenarios. Yes or no?
Yes.
So now we need to understand from that particular perspective that when you do these kind of things, okay, what happens basically? Let's say, for example, if I am already doing the understanding, if I'm already doing the procedures for the audit perspective, then how can I now use the same thing for the purpose of review? That's the only point different over here. We need to understand. Okay. Sorry. Okay. Now, when I talk about basically um, with respect to the review of interim financial information performed by the independent auditor, again, at the end, the review is the same which we have discussed till now. It is not something different. Okay. I'm not talking about anything different over here. I'm not talking about any new concept over here. I am only talking about that what is the basically, how to apply and modify the procedures. Now, one more thing we need to understand is when I'm talking about interim financial information, when I'm talking about interim financial information, that means that information is within the year itself. And you are going to perform further procedures after that also. Unlike, in the case of, let's say, audit, when we close the audit, report issued, everything issued, then we have discussed that. Okay, now the responsibility of the auditor remains limited as per essay. Which essay was there? Event, subsequent events. What was the essay number?
560.
Yes. Yes, very good. So at that point in time, we understood that, okay, no, the auditor's responsibility remains limited to some events after the issuance of the audit report and the financial statement and everything. In the case of interim financial information or review of the interim financial information, one, you are performing the audit of the entire year. At the end, you are also performing the review of these particular interim financial information for the quarterly basis. Let's say you identify something in one quarter. Like if you miss in something in one quarter, if you identify in another quarter, how you will deal with it? Anyone? Let's say quarter one is there, quarter two is there. Something was missed out in the quarter one. Report issued, everything is closed. Now you are doing for the quarter two. How you will deal with that?
Adjust in quarter two, like
Adjust in
subsequent
quarter
events.
two. Okay. Anyone? How you will deal with that? Because that is something we need to understand, like how different it will be and how we need to deal with these scenarios. Anyone quickly? No? Okay. See, again, as I said earlier also, that we are doing the review for that particular quarter. If you miss out something in that particular quarter, or let's say subsequent event that occurred, but it occurred after the closure of the quarter, not during the quarter. Okay. In that case, we will treat that particular event, okay, that particular event based on the similar concept of SA 560, whether adjustment is required or not, whether a revision in that particular financial information is required or not. Okay. So that will be basically treated in a similar way. But where the difference lies is that your understanding of the particular, as and when the quarter will pass, you may already have that information. let's say by the end of fourth quarter. So by the end of fourth quarter, do you think you will be also having more information compared to the first quarter? Sorry.
Yes.
Yes or no?
Yes.
So at that point in time, you may have further information, more information compared to the first quarters. So at that point in time, you can use the same information for your review. Okay. So that is something we need to now, we will be discussing further on these topics in SRE 2410. Okay. Objective is similar, that we will issue a conclusion whether on the basis of the review has anything come to the attention of the auditor that caused that auditor to believe that the interim financial information is not prepared in all material respect in accordance with the applicable financial reporting framework in a negative assurance format. Okay. So in a negative assurance format, whether anything has came to the attention of the auditor which can lead him to believe that the financial information is not prepared, that is something we are going to issue. Similar what we have discussed till now. Okay. Now, again, similar to agreeing the terms of engagement that we have, essay, which one? Which is the agreeing the terms of engagement, which is the 210.
210.
Now the question comes is, will I be having a separate engagement letter for the review? Will I be having a separate engagement letter for the review? Yes, no.
I think there would be a separate agreement, engagement agreement.
There will be separate. Okay. Anyone? Do you think there is a separate review engagement letter? Yes, we will make separate engagement review letter. Yes, separate. See, you may not. It's not necessary that you will have a separate engagement letter. Okay. So let me show you. I'll show you an format of the engagement letter. Okay. Draft engagement letter, which is used for the listed entities. Basically, if it is a listed entity, then I will show you some draft engagement letter format, which will really help you to understand that okay, how we draft the engagement letter for the case of listed entities and what are the things involved in that. Okay. Meanwhile, you may not have. So by the time I show you, but understand till the time that I may not have a separate engagement letter. I may include everything in the one engagement letter. That is perfectly fine. Okay. So not necessary that you will have a separate engagement letter on basically review engagements. It may be part of your entire annual audit, provided it is, sometimes let's say it is part of the law that, okay, you need to perform the quarterly reviews. At that time, you can have a common engagement letter, not an issue. Okay. Then in that case, no need to have a separate. You can have a one common engagement letter, and it will cover the portion of your review also and your audit also. But the thing is, the agreeing the terms of engagement should be like, when I'm agreeing the terms of engagement, the preconditions, what were the preconditions to the audit? Can anyone tell me? What were the preconditions to the audit? Understanding? No, not understanding. Preconditions to the audit. Like there were certain preconditions specified. We have discussed multiple times in SA 210. What are those preconditions? Anyone?
Sir, we need to check first determine whether that financial reporting framework, what we are going to apply, is as per the financial statement is acceptable or not. That first we need to check it out.
Okay. Yes. Very good. What else?
Then we need to check the management with their responsibility as well.
Okay. Yes. Yes. Very good. Similarly, absolutely correct. So what we will do is when we are going to agree upon the terms and conditions of the engagement, at that point in time, we will get it agreed. This is the relevant financial reporting framework that that will be applicable to that particular financial information during the review. Number two, this is the responsibility of the management. This is the scope of the review. This is the provided, like you will give us all the information and you will give us all the access for the review purpose. It is not something that you will put a restriction or limitation on the scope of review, because it may happen that for the purpose of review you perform, let's say for example, first quarter. You are not going to issue audit report at the end of first quarter, but you have to issue a review report at the end of first quarter. So there will be certain procedures which are performed before you can perform it for the audit. For example, subsequent events. For example, you may perform the assessment of the fraud risk at the end for the audit, but for the review procedures, for the interim financial information, you may perform it first, before, to the limited extent. So you agree with the management, if I perform the procedure now, that does not mean there is a limitation that I cannot perform it again in future. If I'm asking you information now, it should not be taken as that, okay, now you have asked the information, now you cannot ask again in the future. That should not happen. So those things basically are required to be understood, are required to be agreed with the management when you are agreeing the terms of review. Okay. Then understanding the entity, similar to what we have seen in SA 315. What we have seen is you identify the areas where you have a higher risk of material misstatement by understanding the entity, its environment, including internal controls. You need to do for annual and interim financial information both. Okay. You may use the information or the audit evidence you have already collected for the annual purpose, for the purpose of interim financial. And then at the end, you will select the inquiries, analytical procedures, and you will analytical review procedures for those particular information where you need to perform. Okay. Similar to what we have seen in SA 315. Nothing different over here. So even for, the one more additional thing is you have is, let's say you are performing a review of quarter 3. You already know what was the understanding of the entity in quarter 1 and quarter 2. Do you think the understanding of the entity between quarter 2 and quarter 3 will change drastically? No, it is not going to change. So, for example, I had understanding of the entity in quarter 1 and understanding of entity in quarter 2. That was same. There is no change in the operations. There is no merger, amalgamation, disinvestment, anything. Business is running as routine. Will there be any change in the understanding of the entity in quarter 3? Answer is no. You can apply that again, provided it has not changed. So your procedures again will be limited to that particular extent to identify is there any change in the understanding. If not, then we can use that. Okay, so some procedures performed by the auditor, okay, will be to update the understanding if required. So here, rather than getting the fresh understanding, you will go and you will see kind of, updating the understanding, not the fresh understanding, basically. So here, a lot of procedures will be kind of, we are updating what information we have compared to taking the new information. Are you understanding the point? So here, my role is more on to use the relevant information that I already hold compared to obtaining again and again new information. Sorry. Okay. Then in that case, once I basically get that particular information, I update my information, then I can use that information for the purpose of review. Fraud risk. If you identified a fraud risk, let's say you said that there is a fraud risk in Q1 in revenue. There is no change in the process. Will you change the risk of fraud for that particular revenue recognition in Q2? Yes, no?
Yes.
Anyone? Yes, no? No, we will not. We will not change, because if there is no change in the process, if they have not changed anything in the process, why will you change? Why there will be a change in the risk assessment, fraud risk assessment, anything that you have identified till now? If there isn't something identified as a misstatement in my previous quarter's review, if management has not rectified yet, you already know where is the misstatement now. For example, there was a problem in the revenue recognition. In the Q1, management did not rectify. You issued a modified conclusion. Now, if management did not rectify, you issued a modified conclusion. In the Q2, when you will perform this review of interim financial information for the Q2, again that is going to be there. So a lot of information will be reused again and again. Are you getting the point? That is a difference compared to SRE 2400. Over there, we did not discuss on anything pertaining to reuse of information. Here we are talking about reuse or again using the information which is already being gathered. Okay, let me also show you one, basically the engagement letter. Okay, this is a draft engagement letter. Again, you can easily find it, this engagement letter, which is there on the portal of ICAI. Now, ICAI has already issued utility on the engagement letters, which is issued by the Center for Audit Quality Directorate. Okay, you can get this utility over there. Like if you see, I'll just show you something in that. There's a scope of work, which is statutory audit. Okay, conduct limited reviews of the like whatever financial information or the numbers you will update. The pink ones are the where we need to update the actual things. Okay, So to conduct the limited review. So you may have a similar engagement letter for the statutory audit, including quarterly and year-to-date limited reviews covered within the above period, like whatever period it may be. So you will not have separate, you will have a one common engagement letter where you will also specify about the review, limited reviews as per the listing regulations. Plus, we will also provide how the review will be conducted. SRE 2410, see the reference. The firm will conduct review in accordance with this. Similar common engagement letter for the review, for the audit, and for everything. Unlike we have in SRE 2400. Okay. Here, the interim financial reporting framework. Interim financial reporting framework, we can apply Ind AS 34. Interim financial reporting as prescribed under section 133. Over there, it may be something else. Remember, we discussed about in the historical financial information, we may use special purpose framework. So here it depends upon what interim financial information you are reviewing and how it is basically designed, and it is for which purpose it is there. Like accordingly, it will change the nature. Okay. Now, that was one example of the engagement letter. Let us go back to the chapter. Okay. So again, using of the same understanding, for example, considering of the results of audit procedures performed, considering the results of any internal audit already performed, considering the significant financial accounting and reporting matters, already you have identified as a material weakness in the internal controls, considering the nature of the corrected misstatement and identified uncorrected immaterial misstatement in prior year's financial statement, even prior period financial statements. So all those things you will consider what is already done. Okay. You will then perform inquiry, analytical procedures, and other review procedures. If you again identify any issue, at that point in time, you may perform additional procedures. The way we saw in SRE 2400, it will be applicable over here also. These are some examples of the procedures. The auditor ordinarily performs that procedure. For example, reading of minutes, considering the effects of accounting adjustments or modifications of the audit or review report. Okay. Communication, inquiring of members of management, then significant changes in commitment, contingent liabilities, debt covenants, all those things that you will perform, okay, with respect to the inquiry. These are the matters with respect to the inquiry. Applying analytical procedures, reading interim financial information, all those things that we have understood will be the same. All the particular information, all the particular procedures that we have understood for the review will be same over here. There is nothing new you are going to perform. Just it will be a kind of a scenario where you are using that information again and again. Okay. Then you will inquire of the management about its future plans. Again, you will do at the quarter. Okay, let's say for example, at the end of quarter one, if I identify some information with respect to the going concern assessment, I will ask the information. Now, usually what happens is management will perform going concern assessment for one entire year. Like, they will cover the 12 months period. So they are not going to perform the going concern assessment each and every quarter. Okay. But what you will do is instead you will see whether there is any change in that going concern assessment performed by the management from one quarter to another. Is there any change required in that? Okay. You will ask, you will check, you will inquire with the management, you will once go for that, but it is not necessary that you have to re-perform the entire procedure again for each and every period if it is within the same financial year. Then you will evaluate the misstatement which is there, which you have identified. Okay, uncorrected, corrected, even the misstatement which were in the quarter 1, which were not even rectified and are being carry forwarded in your quarter 2, you will evaluate the impact of that also. So it's earlier we were talking about review, we issued the report, matter over. Now here, after even issuing the report, there could be misstatement which were not corrected earlier, for which you are issuing the report, like for which you issued the modified conclusion. You have to now consider that again. Then management representation, so similar to what we have seen in SA 580. Auditor's responsibility for accompanying information. Now, what is this? Can anyone tell me? Accompanying information? Have you any seen accompanying information in the case of entering financial information? Is there any accompanying information in case of entering financial information? Yes, no? I'll show you. Again, this is the publicly available data that I'm going to show you, which is the accompanying information with the entering financial information. Okay, so not to be just a publicly available data. It's not, do not focus on the name of the company. Okay, this is the consolidated financial results. Now these are the results. This is the media release basically. This is the quarterly performance. This is the accompanying information that I was talking about. So what we were talking about, accompanying information accompanies with the entering financial information. Now this is the accompanying information. So increase in the year-to-year revenue, increase in the revenue. Now this is something you have to verify. Whether is there any material inconsistency between this accompanying information and your entering financial information. So your entering financial information is over here. It is the unaudited, obviously a review was performed for that. So this is your entering financial information. Okay, so with this you will check whether there is any material inconsistency between this entering financial information and whatever accompanying information is given along with this. This is entire accompanying information that I'm talking about. Okay, and if it is there, then you ask management, similar to what we have seen in, which was the essay similar to this? Which essay was similar to this? Anyone quickly? Which essay was similar to this? Yes. Okay, very good. Very good. 720. Yes. Essay 720. So based on that, like similar to that, the way we deal with the inconsistency in other information, here we will talk about the accompanying information. Communication, similar to essay 260 and 265. Yes. Now, report the nature and extent and the results of the review. That is the main part that we need to understand. We are talking about report or conclusion drafting. How we will issue the report, how we will provide the conclusion. So basically, when it comes to the reporting part over here, it is not different than what we have seen till now. It is not different, basically, the reports that we have seen with respect to the, you can say, the SRE 2400 report. There will be slight differences, but it is not any major difference per se here. So for example, you have a title, you have addressee, okay, identification of the interim financial information, including identification of the each statement of the interim financial information. If it is comprises a complete set of general purpose financial statement prepared in accordance with the financial reporting framework, okay, then you need to specify that management is responsible for presentation and preparation of that. Okay, then in other cases, management is responsible, like, you need to specify whether it's a general purpose prepared as per the general purpose financial statement, or it is just as per the Ind AS that we have discussed about the interim financial results. Small version, some specific information, not the entire P&L balance sheet, statement of equity, cash flow, and everything. So whatever version it is, you specify that the management is responsible for that. Then a statement that the auditor is responsible for the conclusion, a statement that the interim financial information, the review was conducted as per the SRE 2410, a statement that review is substantially less than audit, and it is a kind of a reasonable assurance. Okay. Then you need to provide that, okay, in this case, if anything might have come to an, like to the knowledge of the auditor, then auditor might have reported that, but this is not an audit basically. Okay, so you specify that particular thing in the report itself. And then if the particular interim financial information comprises a set of general purpose financial statements, okay, for example, as I said, P&L, balance sheet, cash flow statement, like that way. Unlike this one, this, if you see, this is the interim financial information in this example, but it is not the complete set. It is the interim financial results. They are the just results. They are not the complete set of general purpose financial statements. So sometimes some companies may go with a general purpose financial statement. Sometimes some companies may only issue the results. So you need to understand whether they are the results or the, just like an entire general purpose financial statements. Accordingly, we will issue, or we will, have a conclusion paragraph in our report. So if it is complete set, then a conclusion, whether anything has came to your attention that they are not presented fairly in all material respect in accordance with the applicable financial reporting framework. In other circumstances, again, if a conclusion, again, whether the interim financial information is not prepared in all material respect in accordance with the applicable financial reporting framework, then the date, place, UDIN, and membership number or FRN. This is the way you do the reporting. If there is a limitation on scope, for example, if management does not provide you the information that is required, then what you will do? What you will do if there is a limitation on the scope of the review? Anyone?
Discuss with those charged with governance.
Okay,
Or
discuss
if
with
not-
those charged with governance, yes.
Or may withdraw.
Withdraw. Anyone else? How will you deal? Let's say, for example, do you think you can withdraw from the any review engagement, like in case of interim? Is it permissible to withdraw, or there are any regulations to that? Anyone?
Hello?
Yes.
Yeah, there is a regulation. If the law and regulation is permit, he can withdraw. Otherwise, what will happen? If it is a listed company, if within the quarter, if he apply for any contraventions, he will discuss within the 45 days. If not there, then he had to provide that quarter Then the the second quarter report also provided. In that case, also he has to provide the third quarter.
Mhm.
If it is a third quarter, there is some mistake. Then he complete the full year only he can able to withdraw. That is a rule is given in the LODR requirement, SBA.
Yes.
SEBI LODR is a listed company. This is a regulation actually.
Yes, absolutely correct.
Will not permit. Actually, he has to complete the review. Then only.
Yes, very good. So at that point in time, what happens is that in certain scenarios, you are not permitted to withdraw from the engagement. Okay. As a result, you may consider basically whether you are allowed or whether you are permitted to withdraw from the engagement or not. If you are not, permitted from to withdraw that particular engagement, in that case, you need to understand that whether you can issue a conclusion unmodified. If no, then you may issue a disclaimer in this scenario. If there is a limitation on the scope and the impact is such that you cannot issue an unmodified conclusion or even, uh, basically like modified but not the qualified one, at that point in time, you may issue a disclaimer of conclusion. Similarly, what we have seen in SRE 2400. Okay. So there could be a scenario where there is a limitation and you need to understand whether you can withdraw or not. There will be chances or there will be scenarios where you cannot withdraw because of the regulation. At that point in time, disclaim. Okay. So that is the one thing that based on the limitations, you need to decide what type of conclusion we need to issue. And rest of the things similar to SRE 2400. When it comes to the conclusions, modified, unmodified, disclaimer, other considerations with respect to the going concern paragraph, all those things are similar. All those things are similar. Okay. Any doubt? This was your SRE 2410. The only part we need to understand in this entire SRE is that how we can use the information already obtained for the purpose of audit or in the previous quarters for this particular interim financial review. Now, see, interim can be half yearly, interim can be quarterly, interim can be, of financial results based on, like, it depends upon what is the interim frequency. That may depend from engagement to engagement. But at that time, you need to understand whether do I have that information available, which I can use over here by just updating some information or by updating some more things into that. If yes, then you should perform those update procedures, and accordingly, you may use that particular audit evidence for the purpose of your review. That's the main thing we need to understand. Clear? Any doubt? Any doubt? Okay. If no doubts, then can we take few questions on this particular topic so that we can understand this topic further? Okay. Let's take few questions on this particular topic. Let me share the screen. Just a minute. Sharing the screen. In time, sorry. let me read the particular question for you guys.
URCA. Mira, the engagement partner of Mira & Co., the statutory auditors of Titanium Logistics Limited. TLL, a listed entity. As the statutory auditor, your firm is also engaged to perform a review of the company's standalone interim financial information, interim financial results, for the first quarter ended 30th June 2025, as required by SEBI, LODRA, Regulations, 2015.
There is some issue. Just a minute. Yeah. Okay. Sorry, there is some issue. Let me read it. During your review, which primarily consisted of making inquiries and applying analytical procedures, you observed the following. The company has recognized other operating income of 15 crores, which is a new and unusual revenue stream. Upon inquiry, the Chief Financial Officer informs you that the income relates to a complex multi-element contract for integrated logistics solutions with a new customer. You requested the underlying contract and the management assessment of the revenue recognition as per Ind AS 115, revenue from the contracts with the customer, to understand how the performance obligations were identified and satisfied. The CFO, however, refused to provide the contract, claiming it is an exceptionally sensitive and subject to the strict non-disclosure agreement. He also states that the Ind AS 115 assessment documentation is still under preparation and will be finalized only at the year end. He insists that since you are the statutory auditor, you must trust the management's judgment for this interim review and issue an unmodified report to meet the stock exchange filing deadline. As CA Mira analyzed this situation in accordance with SRA 2410 and advise on the reporting implications of the CFO's refusal. So there is a refusal basically in this particular scenario. You inquired some information and now you are not being provided that information for the purpose of review. So you need to understand how to deal with this particular scenario. Read the question and take a minute and then try to answer. Okay, now tell me, what will you do in this particular scenario? Anyone?
I think there is a limitation on the scope of the audit, of the review of the financial information. So the practitioner can ask the management to remove the limitation. And if the management refuses, so he can, withdraw from the engagement.
Okay. Withdraw from the engagement. Okay, very good. Anyone else?
Sir, here that the limitation is imposed, that what CFO is give the unmodified opinion, which is not right. But this is as per the SEBI, the SEBI LODR. The thing is that in the interim report, if before 45 days, if he applying for the withdrawal, then it is allowed. If it is within 45 days of the interim quarter, then it is not allowed. He has to provide the report, then only he is allowed to withdraw from the engagement.
Yes. Absolutely correct. See, again, now in this particular answer, I'm not going to dwell into more of that SEBI regulation because I have not discussed any dates in this particular question. So basically, it would not be appropriate to dwell into more to the regulatory side and the legal side, whether it is permissible or not. But how we will write the answer in this scenario is that first we will start with what is the requirement of SRE 2410. Okay, and if we are not able to perform the procedures, if there is a limitation, then what we should do? For example, if there is a limitation, the possible effects of which are material but not pervasive, then we will issue a qualified conclusion. If they are the material and pervasive both, in that case, we will issue a disclaimer of conclusion. If it is not permissible to withdraw, if permissible to withdraw, then we may withdraw from the engagement. But here, understand one thing: when it comes to the withdrawing from the engagement, you are also the statutory auditor. So the withdrawal from the engagement will also be required to be looked in from the perspective of your responsibility as an auditor. Okay. So it's not something that we will say that okay, we can directly withdraw, because we are at the end auditor also. So if we withdraw from the review, are we withdrawing from the auditor also? And
yes, sir. Yes, sir. When we withdraw, we have to withdraw from the existing the continuance as well. Not only that interim. The thing is that law should not prohibit the withdrawal.
Yeah, that's the thing. So whether the law is there or not, there are two things you need to understand. If there is a limitation on the scope, can you complete the review? If not, can you withdraw? And if here in this particular example, we also understood that we are the independent auditor of the entity. So what is the impact of the withdrawal, not on the review, but also being the auditor of the entity? Okay. Can we, considering both of the scenarios, withdraw from the review engagement? If yes, you may, but if not, then on that particular basis, you may issue a disclaimer of opinion or disclaimer of conclusion rather. Okay. That, okay, we basically have not obtained the relevant information, the possible effects of which are material and pervasive, and we are disclaiming the conclusion. Clear? So in this scenario also, what will be done is that understand the effects and the possible effects of not sharing that information. Okay. Then first of all, we will decide, or we will discuss upon the provisions of SRE 2410 and inquiry and analytical procedures. Okay. We need to perform such procedures as auditor deems necessary. Then it comes about the reporting part, where we need to report. And if we are not able to get the information, first we will communicate with those charged with governance that okay, we are not getting the particular information, there is a limitation on the scope. Now then, once, even if we are not getting the information after communication, then you need to evaluate the possible effects of undetected misstatement. If material but not pervasive, then qualified. If material and pervasive, then disclaim the conclusion. Give the analysis in this particular scenario. What is the analysis? And then based on that, provide what will be the, you cannot issue unmodified and clean review report. Either issue a qualified conclusion if the impact is material but not pervasive. If the impact is material and pervasive, then disclaim the conclusion. This is how you will write the answer for this particular question. Clear? Any doubt?
Clear, sir.
Okay. Now, we will see one more question on the similar lines. Okay, but this question is more onto an important part that I want to discuss. Okay. Let me read this question.
M.S. Verma and Associates, Chartered Accountants, are the statutory auditors of Skyline Logistics Limited, SLL, a listed entity. In accordance with their terms of engagement, the firm is also required to perform a limited review of the standalone interim financial information of SLL for the quarter ended 31st March 2025. CA Verma, the engagement partner, performs the procedures required by SRE 2410, which primarily involve making inquiries of management and applying analytical procedures to the financial data. He finds no matters that cause him to believe that the interim financial information is materially misstated or has not been prepared, in all material respects, in accordance with the applicable financial reporting framework, IND AS 34, Interim Financial Reporting. The management of SLL is now finalizing the interim results to be submitted to the stock exchanges and has requested CA Verma to issue his review report. As CA Verma, draft the key elements of the auditor's responsibility paragraph and the conclusion paragraph for your unmodified review report to be issued on the interim financial information.
Okay. Now, this question is more onto the drafting part, understanding the report. Okay. So when it comes to the auditor's responsibility and drafting a conclusion paragraph for a particular report on the review of financial information. And before I discuss an answer for this particular question, the purpose of having this question is to make you guys familiar with the report. Let me take you through one report which is available in the public domain. This is the report which is available in the public domain. Do not focus on the name of the entity and the auditor. Okay, this is the information available in the public domain. Now, this is the independent auditor's report on the audit of interim standalone financial results. Okay, interim standalone financial results ended 30th June 2025. So remember, when we discussed about the report structure, how was the report structure? Let's go back to the study material and understand once more. Okay, this report structure was that first you have a title, you have an addressee. Now, I have a title over here. I have an addressee over here. Then what was the requirement? Second requirement was identification of each interim financial information, including identification of each statement of financial statements. Okay. If it comprises of general purpose financial statements, then financial reporting framework, management is responsible for preparing all those things. So first of all, identification. So what we are doing is statement of standalone financial results of this particular company for this ended date. This is nothing but the identification of statement or interim financial information. Then we identify, when we identify a statement, basically we identify, okay, that the date, period covered by of the interim financial information. If you see over here, it says that for the quarter ended 30th June 2025, and then submitted by the company pursuant to the regulation 33 of LODR and relevant requirements which are there below. We will see that. So LODR 2015, the listing regulations. Okay. Now, then you may have a different, slightly different format because it says that this is the written report, content of written report. So a slight different format will be there based on the LODR regulation. Okay. So how the, as per the regulation it should be. So it's combination of both. Now then you have a opinion paragraph. Now see, in our opinion, to the best of our information and according to the explanation given to us, these standalone financial results for the quarter 30th June 2025 is presented in accordance with the requirements of Regulation 33, gives a true and fair view and confirmation of the recognition and measurement of the principle laid in Ind AS 34. Now, why do you think this kind of review, it is given? Why we have an opinion paragraph and the basis of opinion paragraph? Can anyone tell me in the interim financial statement or the report on the interim financial results? Reason because simple thing.
Sir, this is prepared based on that SEBI LODR requirement.
No, this one. This part. Although it is for the quarter, it is audit. It's not review.
Yes, sir.
Although it is for the quarter, it is audit, not the review. So, yeah, that's why it is different than the review one. It contains all those details. The purpose of bringing this is that even a review, instead of a review, an audit can be performed on a quarterly results. So, if the company wants to issue audited standalone financial results for the quarter, audit will be performed instead of review. And when an audit is performed, okay, the report, everything will change, the procedures will change. You are not in that scenario will perform the what you can say review procedures. Here audit procedures are performed as per essay. So the purpose of discussing this report is you may come across various kind of reports on public domain which may be an audit report on the quarterly results, not necessarily a review report. In that scenario, you need to understand whether it's an audit report or a review report, and that's why the format may change. Here, although it's on the quarter, but it's an audit. That's why I have a different opinion paragraph. The opinion paragraph is not limited assurance. Understand that. The opinion paragraph over here is not a limited assurance. It's a reasonable assurance. Are you getting the point? Generally, when I talk about limited assurance, the paragraphs are drafted in a different way. The paragraphs are drafted in a very different way. Now I'll show you the limited assurance part. So the purpose of bringing this information or this particular report is to show you the difference on the same subject. Again, one information, one report in available public domain. Now this is the independent auditor's review report, not the audit report. On the unaudited financial results, these are the unaudited. Because we are not auditing them, we are only performing a review. Okay, so it will be unaudited quarterly financial results and year-to-date results of the company. This is the title. This is the addressee. And see, we have reviewed. Unlike the earlier, what we said, we have audited. See the difference over here. We have audited, we have reviewed. The accompanying statement of unaudited consolidation financial results, or maybe standalone, whatever it may be. Here we have accompanying statement of standalone financial results, not the word unaudited, because you are using here audited. Then again, the statement of the particular company, joint venture, everything, because it's a consolidated for the quarter ended this, okay, 30th September 2025, and the consolidated year-to-date results for the period ended this to this. If your financial results contain year-to-date also, because it's Q2, this one is Q1. Okay, that's why there is a difference. Because of the Q1 and Q2, Q2 is also a half yearly. So along with the Q2, you present the half yearly result. That's why there are two things. This is the review as per Regulation 33. That was the audit as per the Regulation 33. See the difference between both. Now a statement which is responsibility of the holding company, management's responsibility. Now we are talking about management responsibility paragraph. Why? Here in this particular scenario, we were doing audit. So as per the audit, there was a subsequent paragraph which was opinion paragraph. Once you identify, then you issue an opinion, yes or no? Opinion, basis of opinion. The way you do audit. Yes or no? So opinion, then basis of opinion. In this particular scenario, over here, what you are doing is, in second number scenario, where we are talking about review, we are not directly going to the opinion. First, we are coming to the management responsibility. That management responsibility is to, prepare and to use, recognition in accordance with the recognition and measurement principles laid in Ind-AS 34, prescribed under Section 133, other accounting principles, Regulation 33, all those things that we have. And our responsibility is to express the conclusion. Then we talk about we have conducted the review as per SRE. A review of entering financial information consists making inquiries primarily of person responsible of financial and accounting matters, substantially less in the scope than the audit conducted in accordance with the SA. Accordingly, we do not express an audit opinion. Okay. We also perform the procedures in accordance with the circular issued by the SEBI under Regulation 33(8). Then they will perform that. Okay, this is the conclusion paragraph, you can say. Based on the review conducted and the procedures performed as stated in paragraph 3 above, upon consideration of the review reports and other auditors referred in paragraph 5 below, nothing has came to our attention that causes us to believe that the accompanying statement prepared in the accordance with the recognition and measurement principle laid in Ind-AS 34, prescribed under Section 133, and other accounting principles generally accepted in India, has not been disclosed the information required to be disclosed in accordance with the requirements of Regulation 33 of listing regulations, included in the manner which is to be disclosed, or that it contain any material misstatement. A classic limited assurance opinion paragraph. Classic limited assurance opinion paragraph. This is how you draft the limited assurance paragraph. Few things I want to highlight over here is, one, this is the recognition and the measurement principle laid in Ind-AS 34. You're talking about the financial reporting framework, basically how it is prepared and measured and all those things. You are also talking about your regulatory or the compliance framework, Regulation 33 of the listing regulations. And at the end, you are saying that nothing has came to our attention that can cause us to believe, okay, that it is not disclosed as per these particular frameworks, or it contains any material misstatement, or that it contains any material misstatement. Negative assurance, limited assurance kind of, which is given in this particular scenario. Now, similar to what we have in, audit, that with respect to other matter paragraphs, SA 600, similar to that. That this was not reviewed by us, were reviewed by other auditors whose review report has been furnished to us. Our conclusion not modified. Over there we say our opinion not modified. Similar to that. Similar that one also. Our conclusion not modified. And the report. See, this is the consolidated financial results. Again, not the audited. Everywhere you will see the word unaudited, because the review procedures have been performed, not the audited procedures. Okay. So this is how basically a review report is drafted on the interim financial information. This is the audit report on the interim financial results. The difference between both is that was the review report. This is the you can say audit report. Clear? Any doubt till now? So when we were talking about that particular question, that draft your auditor's responsibility in the conclusion paragraph. So I am talking about this particular part. I'll go back to the report. This is the auditor's responsibility. Para. This is something we are supposed to draft. And this is the conclusion para. This is I was supposed to draft. The answer to that question are these two paragraphs. Clear? Any doubt with respect to the report also? Okay. Basically, the purpose of having that question was to discuss this report and the another report, which is the audit report on the similar kind of information, because you will find both in the public domain. So do not get confused between the audit report versus the review report. Okay. If no doubts, let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Okay, let's take a quick 10-minute break. Thank you. about basically SRE 2410. Okay, that was part of your chapter number 10. So with that, we closed and completed our chapter number 10. Any doubts in the chapter number 10 basically? So chapter number 10 is now over. Any doubts in chapter number 10 before I proceed to the new chapter, chapter 11? Anyone? Any doubts? Okay. If no doubts, then let's proceed to the chapter number 11. Now, chapter 11 basically is another set of, type of engagement other than audit. So in chapter 11, we are going to cover assurance services, other assurance services apart from audit. Okay. Now, what are these other assurance services apart from audit? There could be multiple. There could be different kind of assurance services other than audit. Can anyone give me an example? If you have gone through the chapter 11, you will be aware like what are the other kind of assurance services apart from audit. Can anyone give me an example of that?
Projected financial information or forecast financial information.
Yes, projected financial information. Very good. Forecast of financial information. Okay. Anything else? Anyone else? Any other example? Okay, not an issue. See, one example we already discussed, we say as a prospective financial information. Okay, one is the assurance engagement on the prospective financial information. Second is on the service organization. Now, what is service organization? Where we have understood that? Anyone? Service organization, where we have understood or where we have discussed the service organization?
SA 402.
SA 402. Very good. Yes, SA 402. Now, if we talk about SA 402, like that is already covered under SA. Why we have other assurance other than audit in service organization? What engagement it could be? So, what engagement it could be for service organization other than audit? What do you think?
Here they talk about report on controls.
Report on controls. Okay. Can you give some example on the report of control? Which kind of report on controls? Anyone? What kind of report on controls we are talking about? No? Okay. Remember type 1, type 2 report?
Yes, sir. Type 1, type 2 report. Type 1 report given for the specified period. Type 2 is given for the throughout the period and the in control effectiveness.
Correct. Very good. Now, usage of type 1, type 2 report you already have in SA 402. Yes or no? But the auditor who is issuing type 1, type 2 report, remember we discussed that when a person issues a type 1, type 2 report, we check who has issued the type 1, type 2 report. What is the standard under which the type 1, type 2 report has been issued? Yes or no? Remember something on that? So at that point in time, we discussed that before relying upon the type 1, type 2 report, we do not directly rely. We first check who has issued, what standards have been used, what is the methodology used to issue type 1, type 2 report, the procedures performed. Yes or no?
Yes, sir.
So when we talked about the standards over there, when we discussed about the standards on the type 1 and type 2 report, we discussed, I specifically asked you guys to refer a particular standard at that point in time. to keep, to highlight a particular standard at that point in time. It was SAE 402, 3402. SAE 3402. Okay. Now, what is the purpose of SAE 3402? So, let's say, for example, if we have SA 402, SA 402 on your using of service organization, auditing the aspect of the service organization, SAE 3402 basically talks about issuing a report, which are the assurance report on controls at the service organization. So if you want to audit this report, you use SA 402. For audit, you have a audit SA 402. But for issuing the report, you have a SAE 3402. Clear? Yes or no?
Yeah, please repeat once again, sir.
So when we talked about basically service organization, using the report, auditing the service organization, we discussed that we need to use SA 402. But when it comes to the issuing the report for the purpose of the service organization, remember at that point in time, I specifically asked you guys to make a note that this report will be issued as per the SAE 3402. Let me go back to the notes of chapter number 2. So this was discussed in the chapter number 2 when we were discussing SA 402.
Yes, sir. I could remember you had discussed that.
So just a minute. Yeah. See, this is SA 402. At that point in time, we discussed a particular arrangement. You have a ABC, stat auditor, user entity, user auditor. You have a service organization. You have a service auditor. Remember at that point in time, I highlighted this thing. Service auditor will use SAE 3402. User auditor will use SA 402. So, stat auditor, which is the service auditor we are talking about, it is the assurance engagement other than the audit on the controls of service organization, and for that SAE 3402 will be used to issue this report. Now this will be a type 1 report and type 2 report. Now this report will be provided to the user auditor. Then the user auditor will rely upon this report by using SA 402, will comply with the SA 402, and then will audit the user entity and the controls of the user entity plus the outsourced function of the service organization. Remember something that we discussed?
Yes, sir.
So at that point in time, we specifically discussed 3402. Now, this is something now we will go for in detail. SAE 3402, that is the assurance report on the service organization, which is nothing but your type 1, type 2 report. Now we will understand in this particular standard how to issue type 1, type 2 report. So one is this examination of the prospective financial information, that is SAE 3400. You have a SAE 3402 assurance report on the controls of service organization. And third, SAE 3420 assurance engagement to report on the compilation of pro forma financial information included in the prospectus. Now, understand one thing here. We are talking about all these as in either it is an examination, assurance report, or assurance engagement. All these are assurance engagement, but these are other than audit and review. These are other than audit and review. Okay. So When I talk about assurance engagement, these are assurance engagement where you are issuing an opinion or a conclusion, but these are other than audit or reviews. A report will be issued, but this is not the audit report. This is not the review report. Clear? Okay. Now, before we proceed, before I go into detail of any of this particular standard, we need to understand one thing very in detail. Okay. That when I talk about assurance engagement, okay. See, assurance engagement basically are kind of an engagement where you deal, the subject matter which is there, it is the other than the historical financial information, kind of, you can say. We are not talking that much on the historical financial information. It is beyond historical financial information. For example, prospective financial information. So if you see the assurance engagement, you will see various kind of financial, non-financial information. So it is not only related to the historical financial information. Okay. Historical financial information, we have seen that. Now we will take a step ahead to the other type of financial information. And the level of assurance provided by these assurance engagement is kind of a moderate assurance. It's not a limited assurance, can be a reasonable assurance because type 1, type 2 report again on that level. But you can say a moderate assurance is there in these, and the based of the assurance level in these kind of engagements, it totally based on the type of engagement. Clear? Okay, so let's dwell into the first standard, that is SAE 3400, examination of the prospective financial information. Prospective financial information. Now, my first question to everyone, if you have read the chapter, you will be able to answer this particular question. Okay, the question is, when we were discussing schedules to the CAI, there was the second schedule, part 1. There was a particular clause that if a charter accountant in practice shall be deemed to be guilty of professional misconduct if he permits his name or his firm's name to be used in connection with an estimate of earning upon, contingent upon future projection, in a manner which may lead to believe that he or his firm vouches the accuracy of the forecast. Can you say this is equal to vouches the accuracy of forecast? Examination of the prospective financial information. Again, as I said, this is an assurance engagement, means you will be issuing an assurance opinion. So here I will have assurance opinion. This examination will be report plus assurance opinion. Now the first question is, do you think it is equal to vouches the accuracy of the forecast? Yes or no?
Yes, sir. We studied in the class 3, part 1 of the second schedule.
Okay. Then one side I say,
but the thing is that sir, here in SAE 3400, we are not vouching any accuracy.
But you are issuing a report, assurance report on the prospective financial information. Okay, what is prospective financial information?
The prospective financial information is prepared by the management based on the assumption and the hypothetical assumption. The management will prepare it. We will see whether they are prepared as per the assumptions and estimation. Only to that extent. We will not give any report on this. Only we will give the conclusion.
Okay. So the prospective financial information, as you correctly said, includes an assumption, okay, that may occur in future or possibly actions by the entity. It can be a forecast, projection, or a combination of both. A forecast, which is simple for 1 year, projection for the 5 years, or both. Okay. When I talk about forecast means they are on the basis of these assumptions that these future events which may take place. Best estimate assumptions kind of things. When I talk about projections are kind of the scenario where you say that, okay, these are the hypothetical assumptions. If this happens, then this will happen. If this happens, then this will happen. Okay. So forecast is kind of a scenario that, okay, based on the data that I have available in my hand today, I say this will happen. This is the estimate that this is going to happen based on the data I have in my hand. Hypothetical assumptions are about the future events and management actions which are not necessarily expected to take. For example, if I do this in future, then this will happen. So this will happen based on this thing if I do in future. Hypothetical assumptions, projection. Okay, so forecast is kind of a best estimate assumption. Projection is kind of a hypothetical assumption. So projection can be mixture of best estimate plus hypothetical both. Okay, now this is in total projection. Either it can be mixture of hypothetical or best estimate assumptions or alone hypothetical. But when I talk about forecast, it is always best estimate assumptions. But at the end, the important point here is these are assumptions. These are pretty much assumptions I'm talking about. And the clause which we were talking about, which talks about vouch the accuracy of the forecast. We are dealing into the forecast. Can't we say that it is vouching the accuracy of the forecast?
Vouching means certifying. So here, the auditor is examining the prospective financial information, not certifying it.
But at the end, you are issuing an assurance opinion. But at the end, we are issuing an opinion, assurance opinion. That's where there is one important thing that we need to understand about this particular engagement. Okay. This particular engagement, that is on the prospective financial information, examination of prospective financial information. My assurance, auditor's assurance in this particular scenario is something we need to understand. Okay. So here, the opinion that we are issuing in case of prospective financial information. Okay. Now, here we are not issuing opinion on the accuracy. I'm not vouching the accuracy of the forecast. I am not saying, in my opinion, that this forecast will happen, this projection will happen, this prospective financial information will get materialized and will happen. No, I am not saying that. My opinion over here is something different. My opinion here is specifically is based on the kind of the way this prospective financial information is prepared. So when I will be issuing the opinion, I will not say that, okay, as per my opinion, this prospective financial information is accurate and will happen in the future. No, I will be saying the methods, the assumptions, the information used to derive this prospective financial information seems reasonable. So achieving the prospective financial information, I will not do that. I am not going to vouch the accuracy of the forecast. That means I will not talk about achieving the prospective financial information. For example, in prospective financial information, management says that every year they will increase the revenue by 10%. I am not issuing an assurance opinion that, okay, management will increase the revenue by 10%. I am saying the estimate of the 10% which is made by the management is based on the reasonable assumptions which they have in the hand. Whether they will achieve or not, another story. So I am not issuing as an opinion whether this information can be achieved or not. So opinion as to whether the results shown in the prospective financial information will be achieved cannot be expressed. Sorry, I will not express that because they have not yet occurred and might not occur. My opinion is simply on the methods, information, or the assumptions, whether they are reasonable or not on that. Clear?
Yes.
Okay. Now, throughout this particular standard, we will use the term auditor, but it does not mean this auditor is actually the auditor of the entity. It's just, reference, not intended to imply that a member performing audit has to be statutory auditor. It is just a term. You can understand this as a practitioner also. Okay. Now you understood the particular scope of this particular engagement. So this engagement under SAE 3400, it is to examine and report on the prospective financial information. Okay, but not on the achieving, not on the meeting the target of prospective financial information. How they have been derived on that rather than they whether the company will achieve that or not. Okay. Before acceptance of the engagement, before the practitioner or the auditor accepts the engagement, what do you think the auditor or the practitioner should look into? What are the things that the auditor or the practitioner should inquire into? Anyone? What basically auditor should look into before accepting this particular engagement? No?
Sir, first we need to check that intended use of the information, sir.
Okay. Intended use of the information. Very good.
Then to whom we are distributing this, any limited distribution like that we need to check. what are the elements to be reviewed in the prospectus financial, like we studied in SA 800 and 800 810, there is a specific element of the item. Sometimes we will check give the assurance only relating to the particular item, either balance sheet or profit and loss account or cash flow statement, like that. It cannot be fully the full set of financials, prospective financial. Sometimes we will give the only the one particular line item. We need to check whether in that case, and then we have to see what is a period we are going to cover.
Yes, very good. Very good. So we need to see, first of all, the intended use of the information, where this information is going to be used. Okay. Second, we are going to see about the distribution for this report, whether the distribution is general or limited. It may happen that management prepares the prospective financial information for 5 years, okay, listed entity, and then it's get a report under this particular standard and distributes to entire public in order to show that, okay, no, we will achieve the future target. How the distribution is going to happen, the use of the information, natures of assumption, whether they are best estimate or everything is hypothetical, the elements to be included in the information. Is it the general purpose financial statements, which are the on which the assumptions are made, or the information is something not a general purpose financial information, but it's a financial information of kind of specific nature. Okay, some specific ratios, some specific information, can be non-financial information also. So what kind of element included in the information and the period covered by the information? Now, let's say, for example, if you think that the intended use is not appropriate, if you think the distribution is not appropriate, assumptions not appropriate, elements not appropriate, period not appropriate, at that point in time, you should not accept the assignment. Okay. So if you think the use, the distribution, the assumptions, the information, or the period, if they are not appropriate, you should not proceed with the assignment. Simple. Okay. So if I have to summarize, it is UDAIP, that is use, distribution, assumptions, information, and the period. Okay. You have to verify these things before you proceed to accept the engagement. And if you identify anything, do not accept. If you think any of the item out of this is issue, should not accept or should withdraw from the engagement immediately. And for the rest of the things, use similar engagement letter. When I talk about engagement letter, other terms and conditions, similar to SA. SA, which one?
2400.
Now, engagement letter, terms of engagement.
210.
210, yes. Similar to 210. Send an engagement letter, get all the conditions accepted. All the things should be there. Okay. And as in particular member, practitioner, auditor, okay, here in case of the examination of the prospective information, you have to obtain sufficient and appropriate evidence that the management's best estimate assumptions on the prospective financial information are not unreasonable. Or in case of hypothetical assumptions, such assumptions are consistent with the purpose of information. This is the opinion you are issuing. That one, it is not unreasonable. Second, they are consistent with the purpose of information. They are properly, so the prospective financial information is properly prepared on the basis of assumptions, properly presented in all material, and all material assumptions are appropriately disclosed. And the classification is given whether they are the best estimate or hypothetical. And the prospective financial information is prepared on the consistent basis. So the accounting principles which are used within the historical financial statement are the same which are applied in the prospective financial information. Clear? So this is the main thing. This is the objective of kind of the member or the auditor in this scenario with respect to the prospective financial information. One, they are not unreasonable, means they are reasonable. Second, if they are the hypothetical assumptions, they are consistent with the purpose of the information. Third, they are properly prepared on the basis of assumption. Like the prospective financial information, PFI, is based on the assumptions, which we are saying are either not unreasonable or are consistent with the information, underlying information which is there, properly presented on a consistent basis. Okay, that's the role of the member practitioner auditor in this particular scenario. Now, the procedures that I'm talking about to perform the procedure or to perform the examination of this entire scenario, to examine the prospective financial information, you need to perform some procedures to gather sufficient and appropriate evidence. Okay. Can anyone tell me what procedures you will perform? What procedures you will perform in this scenario? Anyone?
Sir, here we are providing that prospective information only. We are giving that assurance, which means we are the auditor for that. Which means based on the knowledge we received from the earlier engagement, we can use that, and we know where the material misstatement will happen. That area also we are very much understandable.
Okay.
And we know exactly where that financial information, that management judgment also, where we will guess it actually. What are the things where the mistakes, everything will happen. Since we already aware about that particular knowledge about the business entity, we are very much aware about the financial status.
Not necessary you will be the statutory auditor of the company. As I say, I'm using the term auditor, but it does not mean that you are the statutory auditor. You have to consider that as a practitioner. You can be, like a practitioner or a member who is not the statutory auditor of the entity.
Okay, sir. As usual, we will do the nature, timing, and extend verification procedure. All these things we will adopt, sir.
Okay.
That is the first case as per the as usual audit.
In chapter number 5, if I'm not wrong, we discussed something about auditing the some specific scenarios where we were discussed about the auditing a particular scenario where we need to understand that how these estimates are audited. Remember?
Estimate is a 540. Say 540 we discussed about it.
Yes, we discussed essay in essay 540 also, but we discussed in essay 500 also. So something with respect to that was essay 500 also, essay 540 also. Both were there. So what we discussed in that, let's take essay 540 as of now. Fair value estimates. What was discussed in that?
Accounting and auditing estimates.
Mm-hmm.
And the fair value estimation. firstly, that management will prepare the estimation and accounting policies, everything they will prepare it. Then the auditor will check whether that the estimation is properly estimated or the assumptions and policies properly adopted or not. In those area we will check, make a checker like that.
Okay. What else we discussed in that? There was something more we discussed.
Then from where that management has picked that information, what is the reliability of the data, whether the internal control relating to that area.
Okay. Yes. Very good. Okay. So let's talk about that further in much more detail. Okay. See, again, the reason why I am discussing that particular standard is because we actually have already gone through this kind of procedures in auditing. When you are auditing estimates, you have already seen this kind of procedures. When you are auditing kind of estimates, you've already gone through a particular kind of scenario where you are dealing with the estimates forecast. Okay, so we have already seen this kind of scenario. Now, based on that, we need to just build up and we need to understand how to apply that concept over here. Okay, so let me bring up that particular notes from SA 540. We discussed in SA 540 in chapter number 3 at that point in time. So let me bring up that SA 540. So this was something we discussed about auditing accounting estimate, including fair value, accounting estimates, and related disclosure. Okay. Now, what we discussed is that there are estimation uncertainty, management biasness. There were few things that we understand. Okay, that when management prepares these kind of estimate, there's a chance of estimate uncertainty, management biasness. Okay, and to audit this kind of particular estimate, it's not something we can just directly go and audit it. We need to understand the base behind the estimate. Yes or no? So we discussed, okay, what is the base behind the estimate? Why this estimate is kept at this level? For example, we say that, okay, there was a litigation in FY 25-26. How will you validate this? If there is an estimate of 500 rupees of penalty, okay, amount. So what is the base behind this estimation? How it is being derived? It is an amount which is 50% of the management decision, penalty provided. A lot of things were there. Okay, that we discussed at that point in time. Basically, what we discussed is we discussed that when there's an estimate into the picture, when there is anything with respect to the estimate, in that particular scenario, you need to first understand the entity. You need to first understand from where the data is coming, whether it is reasonable, whether it is not reasonable. Okay, what is the basis of that particular data? Okay, what is the methodology used? Yes or no? Are you able to recall that? Yes, no?
Yes, sir. Able to recall, sir.
So we discussed that, okay, it's not only about, okay, the estimate itself. First, you need to understand the background of the estimate. Okay, what is there in the particular estimate? For example, we discussed with that, okay, what is the method used? Are there any controls, expert, assumptions which are used? Underlying assumptions. Are you seeing that? Underlying assumptions. We discussed that. What is the underlying assumptions? What is the uncertainty involved in that? And for that, we went into a detailed procedure that, detailed things to understand whether are there reasonable, significant assumptions which are used by the management. Okay. And how we were discussing about the reasonability, we discussed the reasonability by way of, either we can, as an auditor, develop a point estimate or a range estimate. When we use the assumption of method different than the management, we need to, evaluate for the differences. But having said that, I need to understand whether these assumptions which are used by the management are reasonable in the light of the object or the subject matter. For example, if there is a penalty in this scenario, there was a penalty, 500 rupees. Now, in order to say that this is reasonable, this estimate is reasonable, the basis on which it is prepared, that has to be reasonable. That has to be reasonable. Similarly, when I'm talking about prospective financial information, it is everything estimate. So when I will perform these procedures, first I need to use the knowledge I already have, or from other engagement or similar engagement. Then I need to understand, is management competent enough for the preparation of the prospective financial information? This is something I remember we dealt in when we were discussing SA 500 work performed by the management expert. Yes or no? At that point in time, we discussed if there is any information which is produced by the entity, what assumptions is there, what methodology is being used, who has prepared, whether they are competent enough to prepare this particular information. That decides that whether should we rely upon this information or not. So to show you, I'll go back to the notes of SA 500 in chapter number 5. See, we discussed about the competency, whether they are competent enough. Do they have capabilities, objectivities? Okay, what they are doing, understanding of their work. Like if there is an expert, in this case, it can be an expert, it can be in management. Okay, it can be expert of the management expert, or management themselves. But what is the relevance and the reliability of the information used? Appropriateness of the work. Can we rely upon that information, the accuracy, the completeness of that particular information? So remember something we discussed in SA 500 also. So basically, when you are doing the audit of an estimate, we referred in SA 540 that it's not only about the estimate, underlying data, assumptions, whether the data which is used is appropriate or not, whether the method, model which is used is appropriate or not, whether the information is complete or not, okay, whether the information is relevant or not, reliable or not, all these things we have discussed. Similarly, all these things will be applicable here also. For example, likelihood of the misstatement. That is nothing but your risk assessment. Okay, management judgment. What was management judgment? Affected by management judgment. What was that? We discussed in SA 540, something like this. Anyone? What was management judgments affected by management judgment? What we called that particular thing in the SA 540? Just now we discussed. So in SA 540, we discussed something called estimation uncertainty and the management biasness. Yes or no? So we discussed about the management biasness and the estimation uncertainty. Because of the management biasness or the estimation uncertainty, these can be affected. But if I talk about the judgment and the decision of the management, judgments and the decision made by management, if there is an impact of that, this is nothing but the management biasness. Yes or no? So management judgment, I'm talking about here management biasness. the source of information, purpose, advocacy, reliability, underlying data support the assumption or not. So you need to understand whether the data is appropriate for the assumptions, whether the data support the assumption. Stability of the entity's business. Now, this is one critical point or one very important point. You can make an assumption for a particular stable thing. You cannot make an assumption for an unstable thing. Simple example, I'll give you two charts. Let's say this is one chart. Okay, there is 1 point, second point, third point, fourth point. Okay, if I draw a straight line to this, I can see a trend. Which is a trend? If I talk about which trend it is, if you have to talk about this trend, which is a trend, like which side the trend is going?
Upwards.
Upwards, yes, absolutely. And if I have to predict, if I have to estimate something, I will estimate in this zone, like the next point will be somewhere here down the line. Okay, because it's upward trend. Still, I can estimate it based on the graph. Now I'll show you a second scenario. 1 point here, 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 and second point here, third point here, fourth point here. Can you estimate where the next will be? Can I draw a straight line to this? Can I make an estimate in this kind of graph? Let's say this is nothing but the year-on-year revenue. This is the revenue. This is the year. Year 1, 2, 3, 4, like this way. Same way here, 1, 2, 3, 4, year and revenue. In the first scenario, I can predict the revenue based on the graph that, okay, the revenue is in the increasing trend. But here, the revenue is not in a trend itself. How can I predict whether it will increase further, it will be a flat line or what it will be? I cannot predict. So the stability of the business is very important to, assume something. Without stability, you cannot have a proper assumption. So stability can only provide you assumption. Without stability, there is no support to the assumption as such. Clear? Again, engagement teams experience with the business, industry, prospective financial information, all these things. So whatever we have discussed in SA 540, 500, same. You are not going to perform something new out of the box. You already performed these procedures. Now you have to modify to the extent where it is relevant to your opinion.
I think here we will not give the opinion. We will give only a conclusion, I believe. Right,
Sorry,
sir?
yeah, conclusion. Yes. So conclusion. Any doubt till now? Any doubt? No? Okay.
No, sir. Sir, in this case, we will get sufficient and appropriate evidence, not audit evidence.
No, because it's not an audit. It's an assurance engagement. Other than audit. Okay. Now, basically, this was the first thing that you do with the assumptions part. There is one more thing that you need to check beyond assumptions. That is the presentation and disclosure. See, one thing is the assumptions. Second thing is how assumptions are presented. Okay. One thing is the assumption. Second is the how assumptions are presented. That is very important, because what will happen is, if you have correct assumptions, like not even correct, but you have a reasonable assumptions, but they are presented in an unreasonable way, or in a way which is not proper, again a problem. Okay. So not only the assumptions we are talking about, but we are talking about the way they are presented. So the presentation of the prospective financial information should not be misleading. Accounting policies should be clearly disclosed. Assumptions should be adequately disclosed. Now, if they are the best estimate or hypothetical, they should be identified. Like, okay, this is the best estimate, this is the hypothetical. Okay. Date as of which the prospective financial information was prepared should be disclosed. What is the date? Assumptions to which date have been taken should be disclosed. Data to till which date which has been taken should be disclosed. Whether it is point in range or it is range itself. Okay. Like whether a particular point in the range it is being selected instead of entire range, then the point which is selected is not biased or not misleading in the manner should be disclosed. Remember, point estimate or range estimate. What if, let's say for example, revenue management estimated the revenues will be somewhere around 10 to 100 crores, and management took the far end of the estimate of the range. They created a range and they took the far end of the range. Now, why that point? If there's a change in accounting policy, the reason for the change, effect of such change, all those things should be disclosed.
I think these point we discussed in the initial audit and opening balance engagement, SA 501, I believe.
That is the consistent application of the accounting policy.
Yes, yes.
Okay. So that is one of such area that we need to see whether the disclosure is appropriate. First, you will understand the assumptions, then you will understand the disclosure, and then you will issue a report. Report is pretty much straightforward, nothing complex. There is a title, addressee, identification of the prospective financial information, reference to the standard, SAE 3400, management responsibility. Okay. If there is a limited distribution, that in that case, basically you need to provide restricted distribution. Okay. Statement that the examination procedure include examination on test basis of other disclosure in forecast, projections, and all those things. Okay. Statement of negative assurance as to whether, with respect to the prospective financial information. Then opinion that whether they are presented in accordance with the, whether the prospective financial information is properly prepared or not. Appropriate caveats. That means if there are any caveats, assumptions I was talking about, best estimate, hypothetical, all these assumptions, date of the report, place of signature, and signature. This is how you need to prepare the report. So, for example, this is a, some few things with respect to the report is given over here, important section. Okay. See, based on the examination of the evidence and supporting assumptions, anything has come to the attention which causes the belief that the assumptions do not provide a reasonable basis for the prospective financial information in a negative way. Okay, in a limited assurance form or negative assurance form. Same, express an opinion whether the prospective financial information is properly prepared on the basis of assumptions and is presented in accordance with the relevant financial information. Again, can be kind of positive format. So based on the type of opinion or the format that has been agreed with the management. See, again, what happens is, you before start of the engagement, you understand where this is going to be submitted and what kind of assurance format you are required to provide. So basically, based on that, it is, the format is decided. Okay. So that is something you need to understand what kind of assurance opinion is required to be issued. And based on that, you will draft your opinion. That's why I said moderate, but the level of assurance can change based on the engagement at the start itself. Clear? Any doubt? Okay. Now the question comes is, if no doubt, there could be a one question. Is there a chance of being qualified, modified conclusions or opinions? So is there any scope, or can you issue a unmodified report? Can you issue a modified report in this scenario? Is it possible to issue unmodified or modified report?
Yes, sir. We can issue that unmodified report on forecast and projection. Yes, possibly is there.
Yes, absolutely. So in particular standard, yes, you can issue unmodified and qualified opinion. That is perfectly fine. You can issue unmodified and qualified report. Yes, it's there. So there is no basically bar that there is, you cannot issue a qualified. You can issue. You can issue qualified. You can issue adverse. You can disclaim. Basically, better than to disclaim is to withdraw from the engagement. Okay. So that is the main thing we need to understand with respect to the SAE 3400. Now, to understand further this particular standard, let's see some questions on this particular standard. Let us discuss some questions. Okay. Let me read this for you.
MS Future Build Infra Limited. FBIL, a company engaged in large-scale infrastructure projects, is in the process of bidding for a new 10-year build-operate transfer (BOT) highway project. To secure financing from a consortium of banks, the management of FBIL has prepared a detailed profit and cash flow forecast for the next 10 years, the Prospective Financial Information, or PFI.
What? Sorry.
FBIL engages MS Shah and Partners, chartered accountants, to conduct an examination of this PFI and issue a report thereon, as required by the banking consortium. During the examination, CA Shah, the engagement partner, noted that the PFI is based on several key assumptions. One of the best estimate assumptions made by management is that the average annual maintenance cost for the highway will be 1% of the total project cost. However, CA Shah's procedures, which included analyzing industry benchmarks, reviewing technical reports for similar highways, and noting the high inflation environment, indicate that a more reasonable estimate for annual maintenance costs is in the range of 3% to 4% of the project cost. This difference has a material impact, significantly overstating the projected profits and net cash flows over the 10-year period. CA Shah communicates this to management, who refuse to amend the 1% assumption, stating that it is their internal target and necessary to meet the bank's viability ratios. As CA Shah analyzed the situation in accordance with SAE 3400. Advise the appropriate course of action and the specific reporting implications arising from management's refusal to amend the assumption.
Okay. So take a minute, read the question again, because that is very interesting question. How to understand the data, how to evaluate when the management says some other assumptions, we have some other assumptions. Very good one. Take a minute, read this question again. Take a minute and then try to answer. Focus on each and everything. It's very critical question. Okay, now tell me, as an auditor, what should you do in this particular scenario?
Sir, since it is a building operate transfer, the building construction is they determine the operating cycle will be more than 1 year also. That's fine. That's no issue. And we need to understand the degree of reliability of assumption and the need of the users, the report. See, they are giving to the banker there is no doubt at all. And the thing is that the degree of reliability of assumption, the assumption, the state estimate they provided in here in this particular point, the management is talking about the 1%. And based on that, best estimate as per the auditors, it's not acceptable and not unreasonable. So that is a point is it's a basic objective actually. Management best estimate assumption on which the financial information, the projected information, whether it is acceptable or not, we need to check that. That point alone is not fitting into this particular item. And also that the auditor can give the modified opinion. See, first they need to check for the go to management and discuss this matter with the management. They if they are able to modify that information into the prospective, the projected information, then it's fine. Otherwise, they can think for modified opinion on this case.
Okay. Yes. See, in this particular scenario, what is happening is that management is saying that 1% of the total cost will be the average annual maintenance cost for the highway. That is the best estimate assumption made by the management. Remember, best estimate assumption that we discussed is based on the information available on the hand. It's not the hypothetical assumption. It's the best estimate. Means you have that information in your hand, and based on that, you are making that assumption. But based on the practitioners or auditors procedure, what is happening is industry benchmarks, reviewing or technical reports, similar highways, okay, noting the high inflation environment, the average annual maintenance cost in the range of 3 to 4% of the project. Now, this is significantly overstating the projected profit and the net cash flow for the period of 10 years. That means the best estimate assumption based on the underlying information available as on the date in the hand is not appropriate. Management refuses to amend the 1%, okay, which is necessary to meet the bank's viability ratio. Now this creates a problem, because on the one hand, I'm saying it's a best estimate assumption, that it's based on the available data on the hand, which is not even as per the based on the data. It is not the best estimate assumption. As a result, I need to issue a qualified opinion. Now, if it is significantly overstating, I can say that it is kind of material and pervasive both. Okay, it is a material and pervasive both. As a result, if I have to answer this question, okay, I will provide what is the best estimate assumption, okay, the PFI, what is their moderate level of assurance, I do not vouch achievability of the future results. However, they has to be reasonable. Okay, these has to be reasonable based on the information, and the information available on based on me. If I identify if there is nothing appropriate, if those things are not appropriate, I may issue an adverse, I may withdraw from the engagement. Okay, so in this scenario, I say that okay, this is not reasonable. Rather, 3 to 4% is reasonable. As a result, in my conclusion, I cannot issue an unmodified or clean report. I first have to communicate with dosha with governance. If communication, if that governance is also not accepting, if they refuse to amend, I may, in my basis of adverse opinion, may specify that okay, fine, 1% annual maintenance cost not appropriate. Why the assumption is considered unreasonable? Because of the trends and everything, and as a result, I may issue an adverse opinion. If I think no, adverse opinion is not even appropriate, because in certain scenarios, issuing an adverse opinion still can be misleading, because management may still go and use that particular report, adverse report, with the information to the bankers, and there are chances the bankers might skip the adverse opinion. They might not see the adverse opinion and directly, accept the report. Okay, it is accepted. It is examination is performed. Fine, let us get the report and give you whatever they want. So at that point in time, also consider withdrawing from the engagement if you think your report will be misissued or misused. So similarly, this is how you need to write the answer in this particular scenario. 1% not appropriate, 3 to 4% reasonable. This is not reasonable. I am here to issue an opinion on the reasonableness of the assumptions. Best estimate, assumptions, or forecast. Clear?
Yes, sir. In this answer, they provided this opinion. Is that right, sir? You need to write the conclusion, right? Why they provided this opinion?
Again, why I'm saying opinion? Reason because if you see even the standard itself, okay, if you go to the standard and if you read the standard, it says that you have to have a paragraph as an opinion. Wait a minute. Okay. So basically, this is the standard. The term which is used over here is an opinion. Now, why opinion is used? Why conclusion is not used? The reason because of the nature of the engagement. What happens is when we are talking about this particular kind of assurance engagement, here, when we are talking about prospective financial information, as I say, it can be a limited assurance, it can be a moderate assurance. You need to understand what kind of engagement it is with respect to the prospective financial information. So the examples are given over here. If I show you, we just discussed these paragraphs. See, this is the limited assurance paragraph, where you may say a conclusion based on our examination. But this is a proper reasonable assurance paragraph. Express an opinion. See the opinion word. Now, let's say, for example, a law or regulation requires you to submit this report in the form of reasonable assurance. Over there, you will issue an opinion. But if it is something for something, it is not a reasonable assurance engagement. It is a limited assurance engagement on the review of, or let's say, examination of prospective financial information. Fine. It's a prospective financial information examination. At that, I'm going to issue a negative assurance. I will not use the word opinion. I may use the word conclusion. So that depends upon the nature of engagement, why it is being performed. Remember UDAIP, so that we discussed the use and the distribution, why this particular information is required, what is the use of this information, will decide. This is nothing but the nature of engagement. Why this engagement is required, what is the purpose, that will decide whether you will use the word opinion or conclusion. Clear?
Yes, sir. Still, I am not convinced on this, since we are not getting the sufficient and appropriate evidence. Audit is not there. Audit evidence we are not getting. Then why we are giving us opinion? Still, I am not convinced.
Because
we are,
again, this kind of engagement can be of reasonable assurance. See, audit is a reasonable assurance engagement. That's why you use the word opinion. Here, in this kind of engagement or examination, it can be of a reasonable assurance. There is no limitation on having a reasonable assurance engagement for the examination of prospective information. That's why the word opinion is used. But let's say if you have a limited assurance engagement on examination of prospective information, the wordings will change.
sir, we are not verifying the accuracy of that prospective information, right? No, we are not giving the assurance. We are not verifying the accuracy. Then how can
Yes.
it be the opinion?
Because you are giving the opinion on the reasonableness of the assumptions. You are not giving the reasonableness on the accuracy of the forecast. Again, that's why I say, when we are talking about, the first and foremost thing we understood is, what is our role? Our role is to say that they are not unreasonable. The management best estimates are not unreasonable, and the assumptions for the hypothetical assumptions are consistent. That is kind of the opinion we are issuing. A reasonable assurance that best estimate assumptions are not unreasonable, hypothetical assumptions are consistent. A reasonable opinion that prospective financial information is properly prepared on basis of these assumptions, which are not unreasonable or are consistent. They are presented properly. Their accounting policies are applied on a consistent basis. So on all these things, you are issuing a reasonable assurance. Where I'm issuing a reasonable assurance on accuracy, I'm issuing a reasonable assurance on all these things.
Okay, we are giving the reasonable assurance that the assumption is properly applied and the hypothetical assumption is properly used. Only those area only we are giving the certification.
Yes, we always.
Not
That's why
not the data. Data we are not giving the assurance anyway. Only that estimation whether it is properly done, assumption is properly done, or hypothetical assumption is properly used, on what basis the management is used. Only those accuracy we are checking.
correct. Yes, that's why. See, I am giving a negative assurance on the assumptions. I am giving an opinion that the prospective financial information is prepared based on the assumptions. So the opinion word is on the prospective financial information based on the preparedness on the basis of the assumption. It has nothing to do with the accuracy of the forecast. But on the similar report, I am issuing a negative assurance about assumptions. That it's a negative assurance, it's limited assurance. So my report is covering both of the things. And I include a caveat that achievability of the results indicated by the prospective financial information. So this report is not only on the kind of, say, on the achievability of the assumptions. I am saying both of the things. One side, they are not unreasonable. Assumptions are not unreasonable. Second, I am talking about the prospective financial information is prepared basis of the assumption. That is the opinion, and that is fine. That's a reasonable assurance. So it could be a not. It can, like, it does not contain anything with respect to the achievability.
Right, sir. We are not giving the reasonable assurance. We are giving only the moderate assurance.
Yeah. But again, the thing is, I am not saying anything on the achievability. I am saying prospective financial information basis the assumptions. And on the assumptions, I am issuing a negative assurance. Understand that. So I say PFI is based on the assumptions. That is a moderate or reasonable. But when I talk about assumptions being reasonable, that portion I am saying, this portion I am saying limited. So my entire thing is divided into two sections. One is a limited, one is a moderate or reasonable, you can say. Clear?
Fine, sir. We are not vouching for accuracy of the forecast. That is sure.
And then I'm saying PFI is based on the reasonable assumption. That's it.
Oh, okay.
Any other doubts? If no doubts, can we quickly take up 5 MCQs to summarize the discussions that we have today? Rapid fire one. Like, basically, I would be requiring answer on an immediate basis from your side. Okay.
Okay, sir.
Question number 1. SRE 2410 applies to a review of entering financial information conducted by. These are the options. Management, internal auditor, independent entities, independent auditor, tax authority.
Entities independent auditor.
Entities independent auditors.
Yes, very good, Neha. So entities independent auditor. SE 3400 deals with the examination of
B.
B. Okay. Yes, very good. B.
Prospective.
Prospective financial information. Third, the level of assurance provided by SRE 2410 review of entering financial information is
Limited.
limited. Very good. C. Yes, very good, Geeta. A key part of the engagement under SAE 3400 is to provide assurance on management's
Best estimate assumption.
Yeah,
very
best
good.
estimate.
Best estimate assumptions. A. The fifth one. The primary procedures performed by an auditor in SRE 2410 are
Inquiry and analytical procedures.
Yeah, inquiry and analytical procedures.
very good, Neha. Yes, very good, guys. Inquiry and analytical procedures. So today we have discussed the SRE 2400 and SAE 3400. Any doubt in any of the area? Okay. If no doubt, then I propose to keep the session till here. In our next session, we will continue chapter number 11 and we will complete the chapter number 11. So I request you guys to please read the chapter number 11, rest of the parts. Okay. Okay. Thank you. Thank you, everyone. Good night. Ashokji, session over. Thank you. Good night.